I'm honored to be here.
I'm excited to be here with you.
Well, I'm honored to be here, guys. And I think, Vanessa, you want to introduce me. If you guys don't know me, Vanessa's got a little intro there. We'll dive in some good stuff. I encourage you all to grab a pen and paper, though. You want to take some notes because I promise it'll be entertaining tonight and educational for sure.
Awesome. Thank you, Scott. So everybody, I would like for you to help me welcome Scott Carson, aka the Note Guy. He is a nationally syndicated radio and podcast host of the popular Note Closers Show podcast with millions of listeners each month. He's been an active real estate investor and entrepreneur since 2002, focused on the niche of distressed mortgage investing. For the past 10 years, he's been helping real estate investors and entrepreneurs create wealth through his teachings and strategies. He is a highly sought after speaker and podcast guest with thousands of speaking appearances at events across the country. He's also been featured in many media outlets, including Investors Business Daily, The Wall Street Journal, and Inc.com. He spends his free time traveling to new places and making new memories. He calls Austin, Texas, his home. Please welcome Scott Carson.
Awesome. Thank you for having me, guys. Honored to be here for you all. Thank you. I know Dave is out having fun somewhere. Thanks, Dave. Thanks, Kay. Appreciate that out there for you. I would love to know where you guys are located. If you will, in the chat room, just type in where home is, where you're at tonight. That would be great. I always love the feedback. I am going to ask you guys, if you don't mind, if you do have a question, it's okay to ask it, but let's keep the questions on task. I'm going to stay here as long as you guys have questions at the very end. So honored to be guys a part of it here. But before I get going, I want to know a little about you. Besides where you're at, I want to know a little about you. And so I always, before I speak, I give everybody a Myers-Briggs test. And people are like, oh shit, it's a test? I didn't know I was going to be on a test already here for you. So you're going to see 4 shapes that pop up on your screen: a circle, a triangle, a square, or a star. And I'm going to launch a poll here. And I want to know what shape calls your eyes. Which shape are you attracted to? Because depending on how you guys answer will depend on a little bit on how I comment on this stuff. So go ahead, take us a couple seconds here, let you guys fill this out here. Circle, triangle, square, or star. There's no wrong answer. It is just a fun thing for you guys to kind of get rocking and rolling. I don't see who answers what, so don't have to flip out anything. All right. Give you guys another couple seconds here. We're at 30 seconds on there. And Antonella De Stasio, thank you. Let's see who else that's up there. Mark Livingston from Houston, Texas. There we go. Dave Tuman from Georgetown, Ontario. Michael Tundreau from Gatineau, Quebec, Canada. David Smith says the triangle. That's great. Type it in the poll, though. Christmas is Kelowna, British Columbia, BC. Mark Reitman says Chicago. There we go. Awesome. All right. To give you guys another couple seconds to vote there. All right. So here's where we see. I'm going to end the polling now. Thank you so much for sharing. I'm going to share the results here for you now. As I've given this, and it's always interesting to see a good group. Yes, thank you very much, Vanessa. Thank you, everybody, for filling that out. And you guys fall right in with everything else, everywhere else I speak. Usually, the square has maybe 0 to 5%. That's pretty normal. If you're a square, you kind of need to take something apart and put it all back together again before you take action. Does that sound about right? Like I got to know everything. I got to break it all apart and put it back together. Maybe the engineers on this call tonight. That sounds like you. Yeah, give me a thumbs up and say, heck yeah. If you said circle is the next most common one, the next level up. You guys and gals are those that need to know that. Give me some of the high points, the middle, and the low. I don't need to know everything, but give me some of the high, middle, and the low points so I can take action on things. That sounds about like you. Give me a thumbs up or something. Say yes. Normal percentage rate. The triangle. You guys are like upper management. Just give me the high points. Normally, like right on tap, 20%, 25% of the room I'm speaking at. Give me the high points. I can make my decisions from there. Well, that leaves the rest of you as stars, 64% overwhelming here. Now, stars, you learn best by sex, drugs, and alcohol. So while we can't be at a place and location, have bar, whatever, we're just going to stick to having a little bit of fun tonight. So hopefully you've got an adult beverage there next to you to relax, pop a top, whatever it might be. I promise you guys that we're going to have a good time tonight for you. So, but anyway, thank you guys for being here with me. Vanessa, thank you so much for the introduction. As you said, like I've been an active investor for almost 20 years, focused primarily on the distressed debt, distressed mortgage market, owner financing, buying, selling distressed debt for over a decade now, definitely over 12 years. I've been called the love connection of distressed notes and ugly paper, the Chuck Woolery out there. I've purchased over basically $1 billion in distressed debt, billion, all across the United States on residential commercial properties. I've been featured all across the place, helped thousands of investors. Podcast out there, you listen to podcasts wherever you do, you can listen to me on the Note Closure Show. We're celebrating our 3-year anniversary Friday for the show, 600 plus episodes and 30 million listeners across the United States, and then also listen to in over 100 countries, including our second biggest audience outside the United States is in Canada. So thank you guys for being here tonight. So I want to ask you guys, why are y'all here on a Wednesday evening when you can be doing something else? Well, I kind of know the answer to that. We all have a different reason why we're here. Maybe it's to be sitting somewhere later on in life, drinking pina coladas or margaritas on the beach. You know, that looks a little bit like Dave, though, if you think about that picture there. It looks a little bit like Dave. That's why I thought I'd use that there for you. Maybe it's that, fund your retirement accounts. There was a disturbing statistic that came out that stated that most people at retirement have less than 80 grand in retirement money to survive on. We know that's not going to work, no matter what the exchange rate or where you're located at. Maybe it's you want to spend more time and retire your spouse to do something and spend more time with you. That's a big thing, a great thing to do. Maybe it's to put your kids through college. All right, we know that's a bit of a crazy time out there as well across the country. Maybe you want to say, hey, mom, hey, dad, it's time for you guys to take it easy for helping support me. We know that's a big thing. Maybe it's you want to travel more. Once they open the borders up and you can start traveling to places, you want to go someplace for a true vacation, because God knows we're all tired of staycations, okay? Maybe you just want to upgrade your digs, upgrade your crib, buy new assets. It's great to have goals. It's great to have dreams, but we know one thing is true, is that it takes money to make all this stuff happen. It takes money, and most people don't have enough of their own money to make things happen. So what I love is what Dave teaches. I actually recently just had Dave on my podcast talking about raising capital. I love what he talks about it. There is so much private capital out there, no matter where you're at, that is sitting on the sidelines waiting for you to fund some deals, waiting for you to give them a phone call to make some things happen. And we've got some great stuff. There's never been a better opportunity, I say, than what's going on right now in the markets, even though it's a little bit of a crazy time out there. So what are we going to cover here for the next 5 hours? I'm joking. I'll try to get you out of here in less than an hour for the most part, maybe just a little bit over an hour. But I'm going to discuss some of the ways that how to find distressed debt. I define what an NPN is from the different banks that have this stuff on their books, because it's clogging up their books. There's a lot of opportunities in the U.S. market out there. We'll talk about how to fund these deals with OPM, which I'm sure many of you are familiar with. We'll talk about how to flip notes and how to make money in distressed debt, because that's why we're all here, right? Money, money, money. How to make some money tonight on what's going on in the market. We'll also talk about how we like to focus on rehabbing the borrower versus actually taking the property back. We actually make more money in the debt markets by actually working with those that are on the hook for the deal. We'll also talk about how to build a blueprint for success. And then we'll talk about how we create win-win-win scenarios for you, yourself, the banks, and actually the homeowners or the borrowers on this distressed debt side. So I always like to ask, what does your biz look like? And when I'm talking in front of real estate investors, there's always the big thing, like, oh, most people are out there looking for a distressed asset. They're looking for something like this. It's got to lean onto it, and like, oh, $5 grand and I can turn it into that, right? All it needs is $5 grand in repairs, every wholesaler ever said, okay? I mean, if you look at that picture, you can hear the wind whistling through the windows, can't you? It's got a lean on it of some sort, right? In the lean space. But we're looking, like to say, take something ugly, take something distressed, no matter where you're at, and turn it into something pretty, right? Rub on it, turn a piece of coal into a diamond. Well, I want you to think a little bit different tonight, okay? Because a lot of investors, they get in the habit of thinking onesie, twosies, one deal here, fix and flip. I want you to think like a banker tonight. And I know banking laws are different north of the border than they are in the United States. We'll try to get a little bit of that later on if we've got some time. But I want you to think big picture, because if you really want to get ahead, you can't think small anymore. If you want to accomplish big things, you've got to take your game to a whole different level. And when I think of what my biz looks like, this is kind of what it looks like. I'm not thinking of that single family, 3-bedroom, 2.5 property in San Antonio, Texas, or that 4-bedroom, 3-bath up in Duluth, Minnesota. Okay. I'm looking nationwide for the best deals. And I'm looking for stuff that I can take down bigger picture and take my game to a whole nother level, because that's really how you get ahead. And there's been, look, 12 years ago was an amazing opportunity. A lot of people made a lot of money. Made a lot of wealth was transferred. We're going to see very similar things in the United States here the next 12, 24, and 36 months. And the question I have for you is, if money wasn't an issue, how big a piece of that pie would you want? And the answer to that is as big as I can take, right? Well, I will tell you this right now. There's never been a better opportunity with what we're seeing and what we're experiencing. While everybody's freaking out, oh my God, I got to wear a mask somewhere. I'll wear a mask all the way to the bank, because I will show you how to legally steal from banks over the next hour here for you. So I have bought a variety of debt on all sorts of different asset classes, okay? I've bought debt on single and multifamily homes, apartments, anywhere from a single property all the way up to a 300-unit apartment complex. I bought, like I said, on apartment complexes. I bought on self-storage facilities direct from banks. I bought on medical offices and then restructured the debt. I bought long-term care debt facilities. You see this stuff popping up. Mobile home parks, not just mobile homes, but mobile home parks as well. Motels and hotels, we've bought debt on stuff, all across the country, anywhere from a smaller exterior door to a large 300+ unit hotel as well. I'm actually working on a deal right now for a 1,300 unit, or I should say 1,300 door hotel in New York City that the bank is looking to sell the note for less than 20 cents on the dollar. All right, working with a buyer potentially for that deal. Automobiles, if you like auto debt, I've actually bought a note on a truck. Looks exactly like that one, bought this years ago. Borrower owed 12 grand on it. I paid $3,500 for the note, drove it around for 3 years, and actually got $3,500 trade-in value on it when I traded on my new vehicle. But what I'm trying to get at, everybody, is that one thing you have to realize for every one of us on this call, we're already in the debt space. We're already in the note space. Unfortunately, most of us are on the wrong end of it. If you're paying out on your mortgage, your car loans, your credit cards, your medical, whatever you might have as debt, you're on the wrong side of the payment streams. And my job tonight is to show you how to get on the right side of that stuff. So you've probably heard, oh my gosh, it looks like it's going to be history all over again, 2008 all over again. And I'm going to talk about some things that has led up to the crisis of what's going on right now. Not, something in China. I want to talk about what's going on in the distressed debt space. Now, for the last few years, we've had what's called in the United States non-prime loans. Now, they like to say back in 2008, it was a subprime mortgage meltdown. That was a big chunk of it. Over the last few years, we've had subprime basically show up back again as non-prime. We had 100% financing taking place with FICOs as little as 500. Okay, that's not a good thing. A FICO score, if somebody's got a 500 FICO score, they shouldn't be a homeowner. Okay, they should be renting. Okay. We've seen lending programs come from institutions and banks that were doing 1 day out of foreclosure, bankruptcies, short sales, they're willing to finance. We were seeing record defaults in the auto loan space, the student loans, and the credit card debt space here in the United States. Sounds like a great deck of cards, doesn't it? But I always like to ask people, if you knew 10 years ago what you know today, what type of action would you take? And the number one answer is, I would go buy more stuff 10 years ago because real estate was a whole lot cheaper. Well, we have unfortunately built this card of debts that was basically one or two things away from it come crashing in. And we've seen that happen with the pandemic, with COVID. All sorts of defaults are not only happening now, they've been happening for, they've gotten a whole lot worse with things, okay? So the question I want to ask you, if you knew and could take action 10 years ago and what you know today, what will you do with that knowledge for the next 10 years? What will you do that action for the next 12 or 24 months to make something better happen for you, your family, and your goals that you want to happen? Hopefully, you take action. All right. Now, we'll talk about some of the disturbing numbers out there, which I look at these disturbing numbers. It scares a lot of people. Yes, it scares the shit out of me sometimes, but it also, when you think about what some of the big financial names, when there's blood in the water, you want to run. When people are running one direction, when the herd's running one direction, you want to run in the opposite direction. If you look at it, here's some of the things that were scary. In January, and the numbers that we track, the United States was already, 1 out of 10 borrowers was already a month behind in their mortgage payments. No mask needed for that. We were already 30 days behind 10% of the country. That's not good, okay? Now, as of now, we look back at and we've had over 50 million people file for unemployment benefits. Not receive yet, because that's a cluster. We've had 50 million people file for unemployment just here in the United States alone. Some people are waiting a month without any type of response yet, okay? They expect 52% of small businesses are expected to fail here before everything rolls out. That number is going to get worse the longer as it drags on in different parts of the country. Right now, as of June, and we don't have the July numbers out yet, but as of June, 1 out of 12 borrowers was at least 90 days behind on their mortgage in serious default. That equates to 7.76% of the borrowers out there, basically 4.1 million homeowners in default. Now, the thing to keep in mind is when you look back in history, in 2008, it took us 18 months when everything happened, the last meltdown for us here in the United States, it took us 18 months to get to 1.6 million defaults. We're 2.5 times that number, 3 times faster, ladies and gentlemen. And they're not talking about this. We are in for a big hurt here in the United States when it comes to stuff. Currently, there are 4.7 million borrowers on forbearance agreements. And the Mortgage Bankers Association says there should be another 4 million that should have reached out to their bank that haven't reached out for a forbearance agreement. Okay, we know that, especially here in the United States, with the government-backed loans that we have here in the United States, foreclosure and eviction moratoriums are already ending. The executive order that our president put in place, that expires here on government loans here in just a few weeks, August 31st. There are a lot of people that are scared to death, not only borrowers, but tenants also looking at being evicted, okay? Now, the disturbing thing, if you look at some of the trends, 12 years ago, it wasn't a lot of the banks that financed the distressed stuff. It was more of the big guys, the CMBS, the commercial mortgage-backed securities out of Wall Street that financed 65% of the stuff. Well, now it's been the banks here have gobbled up this stuff over the last 2-3 years. And based on the preliminary numbers, they say that they're involved for about 53% of just the commercial distressed debt. Residential side, they're all for that. But it's literally I don't want to say a tsunami. It's almost like the perfect storm of distressed debt if you're a debt investor. And if you're a bank, the numbers came out just a few weeks ago that the banks are expecting to lose $48 billion on just commercial real estate loans alone. But the big four, get this, the Bank of America, the Chases, the Citi, the Wells Fargo, they have over 150 billion in distressed loans on their books right now. Not just commercial, distressed loans all across the board. So nobody's talking about this here in the United States. It's all about, oh, do we have to wear a mask? Who's going to run and win the election? God knows we've got different things going on. I won't get into that. But I will tell you this, if you look at these numbers, this is something telling you, hey, the United States is about to be on sale. If you've ever heard of Kmart, it's a blue light special across the board for everybody here. If you know where to look, who to contact, and who to talk to out there. As we talked about, this article came out here. Lenders are bracing for us to see close to 15 million mortgages in default across the country. Now, the government has been using, forbearance agreements to kick the can down the road for 6 months. They're talking about doing it for another 6 months. The government can't keep printing money and giving people money every month like they're trying to do. At some point, the piper's got to get paid, and the banks are going to say, hey, thank you. We've tried to help you out, but we've got to take the property back. We've got to foreclose. We've got to do something. And so that's what we're going to see. Now, a little bit of the information on basic investing in notes. We're going to talk about this. I'm not going to be talking about going and buying a rental property. I'm not going to talk about buying the house and fixing and flipping it. That's the last. If I have to buy a note, buy a property, and then fix and flip it, I've done something wrong. It's the thing I hate the most, okay? If you're a landlord, I'm not going to get into how to buy more rental properties. I'm going to talk about how you buy the debt, become the bank, and then have all these different options available to you to really make some things happen. And as I said before, we're all in the note game. And I will tell you this right now. Yes, banks will sell you notes if you know who to talk to. I have before Vanessa gave that nice intro, I was a banker with JP Morgan Chase years ago out of college. And was a vice president with the bank. And I had people come in, hey, we want to buy your notes and buy your debt. I'm like, I have no idea what the hell you're talking about, okay? But there are plenty of banks out there that have the stuff on their books that they're looking to get it off their books. And if you know who to talk to and know what to say and what not to say, they'll definitely sell you this stuff. The beautiful thing when you buy the note is you become the bank. You have all the same rights that the bank has when you buy the note and become the lender. And no, you don't have to have a ton of licenses. Some states require to have a mortgage broker's license, but for the mass majority of, you can do this without having to go into extra license out there. The pricing ranges, we're all interested in discounts. One of the big three things that I love about the note business is the fact that we buy real estate or control real estate at substantial discounts well below what most investors are seeing. I talked about the hotel in New York at less than 20 cents on the dollar. We're seeing all sorts of assets right now ranging in discount from anywhere from 25 to 75% off, depending on the market, depending on the asset class, depending on where it's located. Like I said before, the United States is on sale, ladies and gentlemen. And what I love about the notes business is I have multiple exit strategies. If I can get the person reperforming, great. If I can do a loan mod, or I can have somebody take over the payments, or I can do a short sale, we'll talk a little bit about the different exit strategies and making money. But I love the fact that I actually make more money and get a higher return on not only my investment and my time by keeping people in their homes. We actually make far superior returns than having it foreclose, take the house back, turn it into rental, trying to sell it. We actually make higher returns by keeping people in their houses. And that's one number that we as investors can identify. It's like pi. Pi is 3.14, whatever, right? Return on investment doesn't lie. Return on time doesn't lie. And you don't have to be local to do this. I'm in Austin, Texas. I haven't bought my stuff in Austin, Texas here in the last 10 years because it's been a competitive market. I've bought all across the country, leveraging vendors and people all across the country to be my eyes and then evaluate the deals on spreadsheets and then rock and roll. And then there's vendors and attorneys to help you out with this stuff there for you, okay? And like I said, what we're seeing in the market right now is a variety of commercial and residential deals. Banks roughly have 75% of their distressed portfolios on the commercial side and about 25% is currently on the residential side. That number is probably going to increase a little bit on the residential side, but it is literally a tidal wave of deals that is just on the verge and already starting to trickle in. And what's funny is when you start seeing magazines and newspapers using comics from 12 years ago to discuss what's going on today. This is an example of something that just popped up the other day talking about Wall Street and going to be hit very hard out there. So let's first dive into how we find these deals. Sound like a good idea, everybody? Question here. Timothy wants to grow. Okay, good stuff, Timothy. Finding these deals. Where do you find these deals? You don't go down to your local bank and say, hey, I want to buy a mortgage. No, it doesn't happen that way. There are internal departments at banks and lending institutions that handle their note sales or their distressed note sales, which you get better discounts at versus the performing stuff. They go by specific names, okay? We'll get to the names here in just a second, but there are banks that sell the notes. There are hedge funds that sell notes. There are servicing companies that handle the payment receiving that sell notes. On behalf of the banks, there are auction websites that handle the note sales. There are mortgage bankers that have stuff on their books that they're looking to get rid of. There's a lot of stuff out there. There are private sellers, okay, like myself and others that have notes that we've purchased in our portfolio that we're looking to move, looking to get, like today, I have 2 performing notes that the borrowers just came to the table, are starting to pay again, and I'm going to sell those notes off at a higher price than when I bought a note to another investor looking for performing notes, okay? So there's a lot of different ways to make some things happen, a lot of ways to find deals. There are plenty of lenders and institutions out there that have the stuff on their books. So who am I looking for? And if you don't get anything else tonight, I want you to pay attention to this one slide, okay? You're not going to go to your local bank and like I said, you're not going to call customer service at the bank. You're not going to call the 1-800 number and say, I want to buy your notes. They're not going to know what the hell you're talking about. Each bank, each lending institution has a little bit different name, but it usually falls into one of basically 3 or 4 categories. The first one is the special asset managers is usually the title of the first one. And if you jump on LinkedIn and type in special asset managers, you'll find over 273,000 people that have this job title out there. And one of the ways that we reach out to banks is by going on LinkedIn and typing in special asset managers and then contacting those people at specific institutions. Hey, what do you have in your books that you're looking to get rid of? I'm a distressed investor. I'm looking for non-performing notes. What do you have in your books that you'd like to get rid of this quarter? Okay. Another title that a lot of these guys go by or gals go by is a secondary marketing manager. Okay. Secondary marketing. You type in the search on LinkedIn, there's over 1 million plus connections that say they have some sort of secondary marketing experience in their title or past. Okay. So when I'm calling the bank, I'm looking for the special asset department or the secondary marketing department. Now, I don't say marketing because they'll send you to a whole different department as well. Okay. Chief credit officers is another title. Oftentimes that you'll find at banks. You'll find this with a lot of credit unions, but I spend most of my time contacting banks directly. You see 124,000 chief credit risk officers out there, or you can look at whole loan sales departments. This is the list that I like to target the most. It's the smaller list of just 39,000 potential connections on LinkedIn, but it's the people literally handling the loan sales departments in the banks. It's pretty obvious. Whole loan sales, okay? The beautiful thing on this, guys and gals, is if you're reaching out to this LinkedIn, you don't have to have an expensive LinkedIn account. We don't drop postcards. We don't drop yellow letters. We don't do bandit signs to find real estate deals. We actually, it's the 21st century, and Scotty is here to beam you up, okay? And I'm giving her all she's got, Vanessa, to help people find deals out there. And it is literally as easy as going to LinkedIn, typing in special asset managers, secondary marketing manager. You'll see the person's name and the bank name and the state they're in, and we contact bankers that way to get lists into us. Quicken Loans out of Cleveland. I've been direct to them for about 5 years now because I connected with them on LinkedIn. They send me a list of their loans every quarter that I can cherry pick from. Okay. There's a whole variety of banks out there that are selling stuff. Capital One, what's in your wallet, Wells Fargo, Bayview, all sorts of lenders out there. Capital One, I've been direct to for over 12 years now, and I'll tell you a little story about them. I came across that they were selling a note here in Austin, Texas on a strip mall. And so it's like, okay, I know they sold the note. I can see the assignment of mortgage that was filed to the county and the name transfer. So I get on the phone and I start dialing for dollars. I'm getting transferred. I can't tell you how many times I was transferred to Pakistan. Hello, my name is Steve. No, it's not. Tell me the right person. On the 70th phone call, I got the right person, Amy Grasso out of New York. We talk with her. She sends me a non-disclosure to sign, then sends me back over a 33-page PDF of all their small balance commercial loans. And the font was so small, it was 6-point font. I almost needed a magnifying glass to read the thing. But hundreds and hundreds and hundreds of deals all across the country that I could pick up. And she's like, just buy something. Okay, that was $1 million relationship for me. First deal I bought was a 8-unit apartment complex in San Diego. The borrower owed $550,000 on the deal. The house, the 8-unit was worth $700,000. I bought the note for $375,000, and I flipped the note 24 hours later after going into contract for a $35,000 profit. I'll show you a picture of that one. Wells Fargo Financial. I bought commercial loans from Wells Fargo, 75-unit apartment note in Laredo. We got it reperforming and cashed out of it. BB&T Bank. I've bought stuff from all sorts of institutions. This is just a drop in the bank out there. If you guys would like my slides, I'm glad to email my slides. So you don't have to worry about taking photos of stuff too for you. So, but literally, banks have all this junk on their books. Junk. When it's non-performing, it's junk to them. Okay. And I'll give you a bit of an idea of what some of the things that we've seen. This is a 3-bedroom, 2-bath condo in Miami Gardens, Florida. The borrower owed $175,000 on it. It was worth $50,000 because of the depreciation in the market. We paid $17,000 for the note on it. The guy had not paid in over 2 years. All right, but it was still 3.2. It took us about a year to foreclose. In that time frame, the market value reappreciated, and we made a nice chunk of killing there at the end. It rents for $1,500 a month. If I wanted to take it back, it would have been a great rental for what I paid for it as well at $17,000. This is in Miami as well, down in Coral Gables, Florida. It's the historic David Williams Hotel down there. I bought 2 condos there. Borrower owed $100 on one, another one owed $130 on another one. I picked them up for $20,000 each. It took me about 18 months to foreclose because the borrower fought me on that. But the values were, like I said, 50, 60. But by the time we finished foreclosure, the values had come back and were worth over $100,000 each. We really made some great money on that. I like to tell this story. This is a property in South Carolina, not too far from North Carolina. It was an investment home. The borrower owed $110 on it. It was worth about $80. All right. I paid $24 for the note. 3-bedroom, 1-bath, cinder block home, not on the water, but near the water. And I'd seen by doing my due diligence that the bank provided to me their call notes and all this other stuff on the servicing side. that the borrower was really trying to be friendly with the bank, even though he couldn't pay the mortgage, hadn't paid the mortgage in 8 months. So we buy the note, we make a phone call, get the borrower on the second ring, and I can tell he's at the table, like his dinner's being cooked. I can hear kids in the background, TV on, water running. And he goes, hello. I'm like, hello, is this such and such? He goes, yes, it is. I go, hi, my name is Scott Carson. I'm with Inverse Investment Fund. I'm calling because I'm the new lender on your house in South Carolina. There. He goes, oh, shit. I'm like, whoa, 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 relax. It's okay. Tell me what happened. He goes, well, we bought this house. It was going to be an investment property. We were going to go to on the weekends because it's near the water. We were really excited about it. Then I got laid off. My wife got laid off, and things just went, down the crap. I was like, okay, well, what do you want to do? Do you want to keep the house? We want to walk away from it. He goes, I'd really just like to walk away. I was like, okay, let's talk about that. And his wife, you can hear, the wife says, who are you talking to? Who are you talking to? He's like, I'm talking to the new bank on the house in South Carolina. She goes, oh, your big bad real estate investor deal. All right, boy, you sure screwed the pooch on that one. She said some other things, but anyway, and she's just ribbing in. She's like, whoa, honey, the banker tells me he's willing to let us walk. She's like, whatever, hang up. Fraud, he's a liar. I was like, wow, she's really giving it to you. Okay, here's what I want you to do. I want you not to hang up with me, but tomorrow I want you to call my attorney here in South Carolina. Here's his information. You'll have the documents ready for you either this week that you could show up, and you probably need to bring her along to sign off on it, and I'm going to forgive you that 110 grand in debt. He's like, what? I'm like, you said you want to walk? I'm going to forgive you of it. Okay, I bought the note ridiculously cheap. It's worth 80. I didn't tell him this, but what I was into it for, to take it back, I could turn around and sell that asset at 75, 80 grand and triple my income, triple my money I made on that. Okay. If he wanted to keep the property, I would have modified the loan for him. Let him keep it and start all over again. He's like, but he didn't want it. He just wanted to walk away, bad situation. I was like, okay. I said, here's what I want you to do. And I said, you're going to go talk to my attorney. My attorney's going to actually have a check for you. He goes, what do you mean a check? He says, I'm going to give you $1,000 for you to give it to your wife. Okay. So it's a shut up check, honey. Sure enough, a week later, the guy shows up at my attorney's office, signs the paperwork, doesn't believe it. There's a check from my attorney, hands it to him. I get a letter in the mail from him. And for many people, finances are a very stressful thing on relationships. We can agree to that. Okay. And he goes, I just want to say thank you so much for helping us out of a bad situation. Me and my wife reconciled after this was done. And I was like, okay, it's a performing mortgage again, or performing marriage again there for him. So, banks have all this stuff clogging up their books. This, what we think looks like great, they think looks like shit because it's non-performing. And for every month that a loan goes non-performing, the value of that paper, the value of that mortgage decreases 5 or 10% to the point the paper is not worth what it's written on. And then when you have markets that are being hit hard, like what's going on right now, that value drops on residential. It also drops on commercial properties. And I'll give you an example. Here's one. This is a Hyatt Place hotel here in Austin, Texas, a great market. Roughly the pre-value at the beginning of the year was $15 million. The bank is looking to sell this at $4 million. Okay. Almost just over 25 cents on the dollar. And it's open, it's taking stuff, but it's just people are hit hard. It's an asset class that's been hit. Definitely. I got buddies that are taking these hotels and converting them into apartment complexes and turning them into 2-bedroom, 2-bath apartments and a variety of things. So that's where it really is helpful for us as investors, is the banks weren't meant to put all this stuff together. The banks can't handle defaults for the most part. They don't have the creativity or the flexibility that we do as investors. And that's what I love so much about the note business, is I can find amazing deals from banks. I can take an asset over or take the bank over and work with the borrower, help them to walk away if we need to, and then repivot the asset, either keep it, right, as a hotel, if I buy it cheap enough that makes sense. If not, then we can repivot and do it. So how do you fund these deals besides once you get something from the bank to look at? Well, you got to have cash. You can't go out and get a loan to buy on a non-performing note. It just doesn't work that day. No bank will give you a loan on a loan. Now, on commercial assets, sometimes the bank will carry the paper on $1 million+ loan. A lot of times they'll move it from the non-performing side to the reperforming side if you're taking over the asset commercial. But for the most part, you're not going to find a hard money lender. You're not going to find a bank to give you. So you really have to fund this with OPM, other people's money. Retirement accounts, self-directed IRAs is something we have here in the United States. They say there's roughly $9 trillion in the U.S. market sitting around waiting to be invested in something. The beautiful thing is a lot of times people use their savings accounts, or they'll use transfer money to an LLC to fund it, or whatever they might be, 401ks as their retirement accounts. People can cash that out to fund deals these days on cash. There's a variety of ways to fund note deals. We like to tap into other people's money. We work with a lot of investors across the country to fund deals, whether it's a one-off deal or fund a portfolio. We work with real estate clubs, meetup groups across the country, talking about the different deals flow we have. We'll reach out to self-directed IRA investors. We can actually jump on the different county records here in the United States and actually find people that have bought a property with their IRA account or have lended money out of their IRA account. And that is the only bit of direct mail marketing we do, by sending them a letter or reaching out to them and say, hey, see that you funded a deal. Are you looking for more deals to fund? We would love to talk with you about partnering with us in a variety of things. So we use the county appraisal or the assessors to find self-directed IRA investors, or we'll jump on what's called the county clerk or the recorder's office here in the United States. That's where the documents are filed here locally on a transfer of ownership or a deed transfer, anything like that as well too. So it's all at the touch of our fingertips to find these type of investors out there. All right, let's dive into the big thing, the flip side. How are we making some money on this, right, everybody? How are we making some dinero tonight with stuff? So there's a variety of exit strategies when it comes to buying distressed debt, okay? 10 different ones on just the residential side. And I don't have time to go through all of them, but I'll just kind of give you a flip thing. You buy a non-performing note, if you buy it right, you can wholesale the note, like you can wholesale a piece of property. You could reinstate the loan. You can modify the loan if you want to, allow the borrower to change the interest rate or how much is owned, or do a variety of things, change the payment. You can allow them to let somebody come in and assume the loan, take it over in a loan assumption. You can do that being the banks. Sometimes you get a cash payoff and you're willing to settle for a discount, or get I have a deal right now in Sandusky, Ohio. The borrower reached out to us. He owes about $45,000. The house is a small kind of 3-bedroom, 1-bath house, older house built before 1950. It's worth about 40, 45. He offered to settle at 30 with me. I'm like, I paid less than $6,000 for that note. I'll go ahead and accept 30 and make it a win-win. It's a good return for me versus me have to foreclose, then try to turn around and sell it. Maybe have to upkeep it. I don't worry about that. I'd rather take the $24,000 in profit now and move on. Short sales. Short sales, we have that happen quite a bit here in the United States. I don't know, are you guys familiar with what a short sale is? Where the bank basically takes a loss with the borrower selling the property. I'll give you an example. Say the borrower owes 120, but the house is only worth 100. They list the property for sale in the MLS. Somebody comes in and offers, say, 90 for the property. Me being the bank, I can agree to take a short and approve that $90,000 offer and let the borrower sell the property, let the buyer, buy it, and then let the buyer get off, I guess you could say, scot-free. I like short sales because we're often buying notes well below what the value is, and we can make a lot of money, and we approve short sales relatively quickly. We're not a 6 to 9 month process like it normally takes here in the United States. You can get a deed in lieu or a consent to judgment, we call it kind of cash for keys. Hey, we'll give you $500 or $5,000 to walk and let you move on your merry way. We've paid as little as $500 all the way up to $10,000 for cash to keys, depending on the scenario. Sometimes we're giving the borrowers a month or two of rent or helping them with their moving costs to move on. When you buy a note, and if you get it reperforming or modified and it's been paying for a while, it's now considered a reperforming note that you can sell off at a higher amount. So if we buy a non-performing note, let's say at 35%, and the borrower pays on time for 6 to 12 months, we can often sell that note for 80 to 85% after that period of time and really sell it back to Wall Street, sell it back to other investors that are looking for cash flow as well. 9, our most hated strategy is to foreclose. We still end up doing this about half the time. And foreclosure can range from like 21 days here in Texas to 2 years plus, or 3 years plus if you're in New York. I don't buy in New York. I don't buy in New Jersey. It's just way too long to foreclose there. I like states that are at 9 months or sooner to foreclose, but foreclosure still happens quite a bit out there. 10, sell the note. If you're buying a note and you're working with a borrower of some sort and they're a pain in the ass, but you bought it right enough, you can often sell it to a local investor who can take over that PITA, that pain in the ass, and still make a profit if you buy right. So those are the 10 major strategies. If somebody files bankruptcy on a note deal, the borrower files bankruptcy, we love that because now we have an attorney to talk to that we can work out some sort of either a modification if it's a Chapter 13 or a liquidation and get the property back if it's a Chapter 7. We can talk more about that later on. But Actually, I do not like vacant assets. When I'm looking at notes that I get from the banks, occupied is always more desirable for us versus vacant. If an asset is vacant, it probably has had some sort of vandalism or it needs some sort of work, either plumbing, electrical, roof, foundation. If it's vacant, oftentimes the copper goblins have showed up or the air conditioner has gone off on vacation when it's 110 degrees. Screw this, I'm out of here. If it's occupied, yeah, you're gonna have to foreclose or they won't work with you. But somebody's living in the house and usually taking good care of it. You can tell a lot about the interior of a property. If they got a flag out in the holidays, the lawn is mowed, they got kid toys out there. And then also the fact is that while we can't see inside the property, you can't go and look at inside of an occupied note or an occupied property if you're buying a note. You get the servicing notes. You can see what the previous servicer who's been reaching out and calling the borrower, if that borrower has been friendly or told them to pound sand. So we can tell a lot about that. Then we also use the 21st century technology called Facebook to, I guess you could say, socially stalk our borrowers. And we found information that's been interesting on our borrowers. One lady in Orlando was saying, do I pay my mortgage or do we go to Disneyland? I'm like, you're not going to pay your mortgage. We're going to foreclose on you. We found another guy who was going through a bit of a transition. He wanted to use his mortgage payments to pay for his breast implants. So you see a lot of information on people out there. It's just surprising. So with occupied assets, you automatically have basically double the amount of exit strategies. And about half the time, we're pretty good at getting the borrower to modify or come back to the table of some sort. Okay. We like to rehab the borrower. I don't want to rehab the property. I don't care what the borrower, I don't care, Mr. and Mrs. Borrower, what kind of country western song you went through. If you got, your fourth grandmother died for the fifth time, been laid off from work, whatever it might be, can you start paying your mortgage? If you can start paying your mortgage, great. If you can't start paying the existing amount, what can you pay? Does that, and I have to look at the number, does it make sense? And then we go from there. But here's the thing, pay, stay, all right? There's really three ways of making money in the note business. And I love these three payment streams. If we can get them to reinstate on the front end, great. We get monthly payments. We always, always, always require the borrower, though, if they've been not paying for 6 months or longer, to bring some skin in the game. If I just go ahead and modify them right off the bat without any skin in the game, they're very unlikely to default on their mortgage again. So we like to ask for extra skin in the game. We usually like to do some lump sums or add extra to their monthly payment. Usually try to get 3 to 4 months of payments on the front end. If they haven't been paying for 6 months, they're going to have something they can pay, right? And then besides getting it reperforming, we can either hold on to it for cash flow for good returns, or after 6 to 12 months, can resell the note at reperforming rate somewhere around 80, 85, 90, depends on what the interest rate is out there as well. So get money in the front end, lump sum, month as we go, money along as we go, and money in the back end if we decide to sell the note off there. So it's a really beautiful thing. Now, so if it's a vacant property, we're probably going to see a half where we got to foreclose or go deed in lieu, cash for keys, and try to take the property back. And then we've got to rehab the property. And I don't like doing that. One of the biggest mistakes I made early on in the note business back in my career is I came from the fix and flip side. I was flipping properties here in Austin, Texas as a landlord, and I approached it from a traditional real estate investor. So when I bought notes, I was like, I'm going to foreclose on everything. Screw the borrower. They've had their opportunity. And now I'm sitting there with notes that I'm not getting any money in. I'm having to fork out attorney fees, forking out repair costs. And so it really stretched out my cash flow. And really, I had a lower return on investment. When I look back and recalculate the offers, that if I would have modified the loan, I would have made a lot higher return and a lot less stressful, because I could have converted those loans into reperforming loans in 30 to 90 days. Okay. Like I said, vacant properties often need work, some sort of major rehab or something, or often can be kind of pretty ugly in the side out there for you. And it often takes longer to foreclose too. If it's a vacant asset. Now, some states, they'll expedite if it's a vacant foreclosure, like New Jersey's a state that if it's a vacant property, they'll speed up the foreclosure process to just about 6 months versus a year to 2 years that it takes. But for the most part, you got to track down the borrower and serve them and go there. I would rather deal with a borrower and either get them to rock and roll or pay them, incentivize them in some way to work with me to walk away. A lot of people like ugly houses, and you'll find a variety of little ugly houses across the country on the banks out there. Here's an interesting case study a lot of people really like. This is a duplex in Phoenix that was on part of a portfolio that we got from Wells Fargo back a few years ago. And this is an interesting story. It was an investment property. We knew that going into it. The borrower owed $130,000 on the first lien. There was no second lien. He hadn't made a payment in 18 months. Okay. Now the house is not that little desirable, like it's a little duplex, a little front house and the back house. Okay. If he put 30 grand in repairs into it, it would be worth 110. As it sat, it was worth about 55,000 as it sat, current market value. Now, I always like to ask people, and this is the interactive part of the thing, what would you pay for this note? If it was worth 55 as it sat, needed 30K in repairs, what would you pay for it? Somebody want to offer up some offers on there? Those that are paying attention here tonight, do I hear 20 grand, here 30 grand, 30, 31 going once, going through it twice. Well, a lot of people are like, oh, if you look at the traditional ARV, it's worth 55. I'll offer 30 grand at 60% ARV. Okay, here we go. Tracy says 20. Dave says 20. EM Robinson says 25. Brian says 15. Sorry, Brian. EM already says 25. You're the lowest, Brian. Your bid is kicked out. Okay, sorry. You're blacklisted for being a low ball investor. Okay, no, I didn't. I'm just joking with you. I wish I had 4 or 5 of these. I would have sold one to all of you because we didn't pay 25. We didn't pay 30. We didn't pay 20. We didn't pay 15. I basically paid $3,750 for this note. I should have. It's a funny story. When I called the bank, I offered $1,000 because they hadn't paid in 18 months. Okay. He countered at 5. We countered in the middle at $3,750. And that turned into roughly $17,000 in profit. Now what happened is, it's a funny story here. The borrower was living about 2 miles down the road. I sent my realtor by, Bobby Wilson, and she went by and drove by and found out that there was 2 bums living in the property. Now you can't really see it, but it was occupied illegally, a couple squatters. And these bums were doing a great job. They were, you can't tell here, but on one side of the house, they had dug a trench and buried a garden hose and was stealing water from the next door neighbor. And then they were stealing power from the other next door neighbor. All right. So, you know, I was kind of cracking up about that a little bit when I found that out, but we were able to get them out of the property and move on. As I said, we bought the note at $3,750. I called the borrower up and said, you know, send him some letters. He wouldn't respond to the letters. I get on the phone, give him a phone call. He answered the phone. I said, hello, Mr. Ratana. How are you doing tonight? My name is Scott Carson. I'm with the new lender on your property on Holly Street. And he's like, oh, shit. I'm like, oh, it's okay. It's all right. We often get that response when we're talking to borrowers. I was like, it's okay. I want to work with you. Let's talk about this. Let's talk about this. You know, I'm your bank. What do you want to do? He goes, Holly Street. I'm like, yes. I go, do you habla inglés? He goes, yeah, I speak okay English. I said, you probably speak English better than my Espanol. He goes, probably. I said, well, let's talk about it. You know, because I want to work with you in some sort of fashion. And then his wife heard him say something. He's like, oh, no habla inglés, no habla inglés, and hung up on me. My realtor goes by, knocks on his house the next day. She's able to have a conversation with him, tells him what we want to do. We just want him to walk from the property. He agrees to it. He shows up at title, spoke fluent English at the title company when he signed over the property onto us. And so we paid $3,750 for this. When Bobby found out what I paid for the note, she basically dropped her jaw and said, hey, Scott, I've got $5 grand in my retirement account. Can I fund the deal when we split the profits? I'm like, yeah, let's do it. Sure. You mean I can sit in San Antonio where I was at the time, do a deal, all the way across the country, not have to show up to collect rent, not have to use a hammer and literally have somebody else do the work for me. And I can still make basically $8 grand on the deal. Yeah, let's do it. So we did it. We listed, not even on the MLS. I think she listed on Craigslist, sold it for 25 grand to a cash buyer. That was her and her husband laughing all the way to the bank on it. I never walked the property, never swung a hammer, never collected rent or showed up at the closing. That's one of the big things I love about the note business. Is 95% of the assets I have bought and the notes, I have never walked the property myself. There's always been somebody else there to do it. I'm in Austin, Texas. I mean, I'm literally 2.5 hours away from 90% of the United States that I want to jump on Southwest Airlines. I rarely do that because when I'm buying, I'm usually buying 5, 10, sometimes up to 60, sometimes up to 100 assets. It would take forever. I'd rather use realtors and other local investors and meetup groups to do the due diligence for me. And they'll go out and take a look at us. Like I said, it took me about start to finish 3 hours of combined work, and I closed on this deal from over 1,000 miles away. Okay. I wish they were all that easy. EM says, sign me up. Exactly. Well, hey, if I had 4 of these, I'd sell 4 of these all to you guys out here. So, but we see that. The beautiful thing, there are vendors in place to help you out there. There's vendors to collect on the payments. There's vendors that reach out and make the phone calls for you. You guys, if you're going to be in a debt game, basically you're like the general manager of like a hockey team. I'm going to use a Canadian reference here. If you're in charge of the Edmonton Oilers, You're not going to be the one going down there and selling beer, sweeping after the game. You're going to be up there making decisions. Okay, we're going to draft this one. We're going to hire this guy to do it. We're going to make sure that the ad stuff, you're really a general manager of your business here. Okay, and that's the beautiful thing I love about this business is I don't have to be in front of my house. I don't have to show up for rehabs. Nobody calls the bank when little Timmy flushes the rubber ducky down the toilet and water's coming out. They don't call the bank. Okay, they call the landlord, or they just go, oh shit, and run the other way. So all sorts of deals we'll find out there. Good deals find money. This is a condo in Fort Lauderdale, Florida. It was near the water. Value was $100,000 fair market value when we came across this deal. The guy owed $160 on it. Hadn't paid in a while. 2-bedroom, 2-bath, 1,050 square foot. Like I said, Fort Lauderdale, pretty nice area there. Rent for $1,200 a month. There was about a $250 a month HOA as part of it. The guy, like I said, owed $165,000 on this. 24 months in default, and it would take roughly, if you bought the note, 12 months to foreclose. Now, I will ask you guys as well, what would you guys pay for this note? If it's worth $100 right now, what would you pay for it? Here's a little thing. And clean, too. We talked to the HOA, the condo association. Clean. Didn't need any work. $25K, Dave, okay? Yeah, Sharon says, I need one in one of these deals, even going from Canada, American dollar, that is a deal. Exactly. 11K, come on. It's worth 100. I'm not going to sell it to you at 11. I keep it for that 15K. Come on. It's worth 100. 25, 35. Okay, you're getting better pricing now there for you. Otherwise, 11K, I'm not going to look at your offer. 25K. All right, you counter DM. Neil says 40. That makes sense. Okay, good stuff there. I mean, that's the beauty of this stuff. Was the HOA in arrears as well? Yes, it was, Timothy. But in Florida, when you buy the not performing asset 10K, no, Harry, sorry. Loving the interaction here. What I love about in Florida, and we call it God's waiting room, there's a special thing called safe harbor. So if they're 2 years behind their HOA, I think the guy was like $15,000 in HOA fees. I don't remember exactly what it was. When you buy the note and then foreclose, the beautiful thing is it wipes out that HOA. You've only got to pay the lesser of 1% of the original sales price or 1 year of HOA fees in Florida. It's called safe harbor, okay? So Sharon says 50,000 easily. HOA is a homeowners association to make sure all the borrowers, all the property owners are living by the regulations and make sure they're not doing all sorts of crazy stuff. That's what an HOA is. Sorry. Okay. So I didn't pay $500 for it, Kevin. I paid a little bit more for it, but that's okay. I paid $33,000 for this note. Still a great, phenomenal deal. The fact that I would have had to foreclose, but I flipped it for 60 grand. Literally, I flipped it for 60 grand to another investor who did all the work. I said, I'll take my 27,000 in profit and let them deal with it. Well, Tony, he's actually ex-Canadian. He's an American Airlines pilot, lives down in Florida now. He used to live in Canada. He reached out to the borrower, was able to get a consent to judgment from them, finished the foreclosure process a lot faster than 12 months, did it in 90 days, and then sold the property for 90 grand. So it was a win-win across the board for both of us. He was living down in the area. He wanted to deal with it. Great. Borrower lived out of state, but he was able to negotiate with it. So it's truly a win-win across the board for all parties involved there. It's like condo fees here in Canada. Exactly. It's exactly what an HOA is or a COA is here. So anyway, you can make money holding the note. Jamie and Lanny Harrington are some good friends of mine out of Taylorsville, North Carolina, which is just north of Charlotte. The great people. She's been a mortgage broker and CPA for 20 years. He's a fix and flipper. They bought this note. It was on a portfolio from a hedge fund, had about 75 assets, had this one note in North Carolina, which was down the road for him. All right. And the numbers on it's not the biggest asset. And I saw this. I said, well, if you want to make an offer, she goes, I think this is in the hood. I think it's in a bad part of town. I'm like, well, do you want to make an offer? She goes, well, I'll send my brother out. He's not scared of the hood. I'm like, okay, great. He goes out, says it's not a bad looking property. That's actually his photo. She made an offer on the note. Okay. And it was like, literally, you have a lot of hedge funds or a lot of banks that have stuff that's been on their books for a while. Now, the UPB, that stands for unpaid principal balance, means they owed $37.5 plus back payments. When we looked at it and pulled our own comps, we saw it was worth about 50. The bank, though, valued it roughly at 30. Okay, you got to realize these banks are looking at thousands of deals. They don't know the true details of every asset, what's going on in the neighborhood, what's going on in the condos, what's going on with the property a lot of time, because they're just basically looking at spreadsheets. So I told her, I said, listen, make an offer cheap, make it at like $5,000. And she's like, I think I like this condo. I'm going to make an offer for 17.5. I was like, no, make an offer for 5. She made an offer for 17.5. The bank accepted it. When I called the banker and said, hey, what would you really accept it? Because I probably would have accepted 7. I was like, oh shit. But, you know, in some cases, people are like, well, she overpaid by 10 grand. Not really. The house, you know, the place is worth 50, 51. She still picked it up at 33 cents of value, 50 cents of what was owed. Still a win. Now, she went out and knocked on the door, which I told her she shouldn't have, but she did it anyway. And the borrower answered the door. He was a big guy, long haul truck driver. He'd been laid off for quite a while, but he'd just gotten hired back on for a new company there in Charlotte. And he's like, I would love to stay in the house. He opened the door. You could see that he'd done all this nice work. It was in great condition, didn't need any work. I'd love to stay. I just got hired back. Can I give you $5,000? Can I give you my sign-on bonus to keep me in the house here? And what do you think she said? She said, yes, of course. Why not? So she accepted the $5,000, got him start paying again. It turned out, based on the payment stream, it was about a 22% cash and cash return just on the payment stream alone. Now, the big kicker here is 7 months later, he shows up at her office and is moving out of state and just wants to sign the property over to you. He goes like, I know I can sell it, but I don't have time. Can I just give you the property and you let me walk? And she's like, okay, sure. So pretty good return on investment there for you, because you have people that, you know, they want to walk. You still have people, though, that you got to foreclose and be a little rough with sometimes. No, not rough it, but you got to get the attorneys. You don't run a charity. You donate to charities, or you have your own charity, but you're not a charity. You have to give people opportunities. And that's what she did. Say, hey, if you're going to miss this payment, you're not going to get the $5,000 back. You miss the payments or don't stick to the loan mod, I still have the right to foreclose and take the property back. But it worked out in a win-win there for you. So sometimes you'll get deed and liens. This is an asset where the borrower just signed the property over and walked away from us in 30 days. It's in San Antonio. I bought, the borrower owed $130,000 on this deal. Hadn't made payments for 12 months. He'd been laid off of work and tore his ACL. We bought the note for $53,000 from a bank out of Dallas. You know, I drove by. That's my realtor, Haley Catlett, sitting out there in front looking at the property. I was like, oh, this is a pretty nice looking property. It's worth, you know, 110 roughly at the point. Needed $5,000 worth of work, basically a fresh coat of paint, and had to replace the carpet in one of the bedrooms because the guy's pit bull tore it up. He was actually out of the house. Okay, moved out. So we got deed and lieu from the time we bought it in 30 days. I raised capital because I had a really good deal. So I posted it in the meetup groups, meetup.com in San Antonio, about the deal. Say, hey, it's worth this, $5,000 worth of work, looking for somebody to split profits on the deal. We had 7 people respond immediately in 12 hours to fund the deal. And like I said, we sold it 90 days later for $125,000. Okay. Texas, we have a fast foreclosure process. If he wouldn't have played ball with me, I could have foreclosed. I don't know why the bank didn't foreclose, except for the fact that they were overwhelmed with a variety of things. And a lot of people ask me that, Scott, why wouldn't the bank just foreclose versus selling it to you at a discount? Because they're not in the property space. They're overwhelmed for a variety of reasons. And if I could give this bank $53,000 now versus having to drag it out or not, God knows how long, they would rather get that money and leverage it out. And then it's a win-win across the board. Okay. $60,000 in profits is not a bad day for even taking 120 days on the deal there for you. This is a property in Florida. We bought the note. We thought we'd have to foreclose. The bank, literally, when we opened up the loan file and it was sent to us, there was a signed deed in lieu sitting on top. The bank didn't even know that the borrower had signed the property back to them. This is a property in Cincinnati, Ohio. I bought it for $15,000. The borrower was elderly. She was moving into a retirement home. She didn't want to leave the property to her kids. She's like, those rats, I don't want to get anything. So she signed the property over to us. We sold it for $48,000, roughly 45 days later. I did a little bit of work. This is a property in Tennessee. The borrower paid it. I'm sorry. This is actually in Alabama. Actually, Alabama. Borrower paid in full. Hadn't paid in 12 months. We sent it out letters, door knockers. We start the foreclosure process. Boom. We get a payoff request. Boom. We tripled our money on this deal. Took about 9 months, but still, it's a pretty good ROI on that stuff for you. This is a 8-unit apartment complex in San Diego that I talked about it beforehand. Borrower owed $549 on it. Literally, the bank's appraisal that we got from Capital One said $700,000 value. They accepted $375,000. I didn't have the $375,000 when I started off doing this, so I basically sent an email out to my clients, out my database. I had an investor come back, said, okay, well, you'll be $415 for it. So I made a $35,000 profit basically in 24 hours on this small little 8-unit apartment complex. He ended up making $148,000 on the deal about 9 months later by getting the borrower to walk away and then selling it as an REO. Okay. Thank you, Neil. I'm glad you brought that up. Is there ever a bad outcome? Yeah, there's bad outcomes. Sometimes you'll buy, if you don't do your due diligence right, you always want to check title, taxes out, because a tax foreclosure can wipe you out. I've seen people that didn't pay attention. They didn't check title, and they bought a property that had been wiped out. Like I was looking last night on a website that had this like residential assisted living in Paradise, California. I was like, man, that's a pretty $75,000 for a 2-bedroom in California is ridiculous. And then I realized, like, wait a second, it probably burnt down, but the property, the pictures they showed was looking all pretty. And so that's a mistake. If you don't send somebody out, an actual realtor to pull comps to drive by the property, you could buy an empty lot. You know, we've seen that happen before. Or if it's it's a trashed out house, if you don't know what it is, you're just trusting Zillow values. That's a big thing. If you don't get aggressive in your borrower outreach with a servicing company, that can also be a bad thing. So you've got a lot of things you got to look at differently than just the value of the property. You got to understand what's going on with the borrower. And so, like I said, that's why I say it's a different mindset than your fix and flip side of things, because you got to know what's going on. These are 3 condos in San Diego, right on the beach there. We originally approached the developer on this one because they were hanging on his portfolio. The bank wanted it off its books. So the bank actually started to foreclose on him. We reached out to the bank, bought the note from them cheaper, went back to the borrower, the developer, let him walk from the loan, held on to it for about 6 months, and then sold it and made over $1 million on this deal here. It took a little bit longer. And obviously, when you're raising $3.5 million in capital, it takes a little bit of time to do that too, but we did it. You just got to know what you're doing. You've got to put the vendors in place. If you try to do it all, you're going to really screw shit up. That's why you got to know, what are you looking at? How do you perform due diligence on these things? How do you look at borrower stuff? Sometimes the banks will call you on deals, and you've got to make sure that the price makes sense on a lot of things. I got a question here. Let's see. Can Canadians invest these notes remotely? Yes, Barry. Yes, you can. Timothy Barry says REO. Sorry. REO stands for real estate owned. That's when a bank takes a property back and then it's real estate that they own. We deal with it. We've got quite a few of our clients and our students are actually Canadian investors that invest here in the United States, either through an LLC or Delaware Corp. You want to talk to your attorney to figure out how to set that up properly. But right now, what you have to realize too is the banks, if you've closed a deal with a bank, oftentimes they'll have deals that they're looking to get rid of. And if you close a deal and perform with them, you'll find a new best friend out there. This is a deal in West Palm Beach, Florida, 6 or 8 unit apartment complex. Anyway, 6 unit. It was worth, when we looked at it, when we first got it, it was worth about $240K. Not in a great part of West Palm Beach. Borrowed over $490K between a first and a second loan. Okay. When the bank reached out to us, originally they said 300. We said no, it's way overpriced. A month later, we followed back up. Hey, do you still have that? No, yeah, we want 244. Like, no, way overpriced. 90 days later, we finally settled on the 175K, and it was basically half occupied. The beautiful thing is that the bank had overtaken a receivership where they were controlling the asset. So when they sold the note to us, it was 8 months till the foreclosure auction. And so in that 8-month period of time frame, we were able to get new tenants in place, new leases in place, get it back at the performing, so that when we took it over in receivership and when we took it to the foreclosure auction 8 months later, we sold it for $310. And the banker calls me about once every quarter, once every 6 months with something that falls out. We still touch base on a regular basis. He's on my Christmas card list when I do send Christmas cards. But that's the thing, is there's so many institutions out there that don't know where to turn. Banks are in the performing note side. They're not really set up to do the non-performing side. So as long as you know what you're looking at, pulling values, pulling title, you got to really do your due diligence like anything else, everybody out there. But the opportunities really do exist in some great things here. Like I said, the law of averages, if you buy 10 notes, you probably 3 to 4 you'll modify, 3 to 4 you'll get the borrower to sign the property over and go back to you. Then the other 4 to 6 you'll have to foreclose. Americans, we are guilty of hiding our head in the sand, everybody, okay? And a lot of times we need somebody to come up and give us a big swift kick in the ass. Well, you have to realize if you're a note investor, your deal is not really to take the property back. But when you buy that note, it's to modify or reinstate to deed in lieu, to let the borrower walk, or if they won't deal with it, you foreclose and then sell it as an REO. I don't like owning property. If I got to take a property back in foreclosure, I want to sell it because then I want to capture that equity and that money now, and then I can go back and double down, buy 2 or 3 assets, okay? We create win-wins for the property owner in a variety of fashions. One, obviously, offer them a deed in lieu, allow them to walk. We don't come after them for a judgment. If they're going to work with us, hey, great, we'll be their best friend. We're not reporting new late pays in their credit reports. We're not reporting a foreclosure on their credit. We're not doing cash. I mean, we'll do cash for keys a little more. Sometimes give them some cash in their pocket. They got some equity, or just help them move on their way. And we're not coming after them with like promissory notes, which is what happened beforehand. And the banks still try to do this a little bit when they take a loss. America has got their head in the sand, as we talked about before. 4.1 million Americans in default. Another 4 million that should have called the banks that haven't called the banks. That's just on the residential side. Commercial side is even worse. We create win-wins for the banks because A, they get rid of the bad debt that's killing their books. Banks are evaluated on their loans, on their performing and their non-performing. For every loan, every dollar in non-performing costs them roughly 8 to 15 times that in their ability to leverage that. The fact that we can come in and buy a note now and close on it now, settle in a fraction of time, they get the cash and move on, do something else for the next 6 to 12 months. Great. Banks do not like real estate owned. They don't like owning property because it's a non-performing asset for them. Okay. Banks have had this pretend and extend mentality on commercial notes for years. We're going to see some of that. We're like, oh, hey, you haven't paid us in 6 months. We're going to give you another year. We're going to extend it. No, that's part of what gets them in trouble out there. And one of the biggest things is bankers, they've been gobbling stuff and financing stuff as the market keeps going up and up and up. And the market had to change at some point, but that didn't stop them from funding all this stuff. So the biggest problem with banks and asset managers is they've got an obvious problem. They got their head shoved somewhere else. They're not paying attention to what's going on in the market, ladies and gentlemen, which means huge opportunities for you. Okay. As a Canadian, how can we get the bank to reinstate or modify the loan? I'm not sure what you mean. As a Canadian, when you buy the note, you become the bank. You or your entity becomes the bank. All right. Brian asked a question. Do you ever keep properties and refi them and hold them? Rarely, Brian, only if it's in Texas or Florida, because those are those 2 states I want. It makes more sense for me to take all the profit and then double down, buy 2, 3, or 4 assets at the time. Now I'm going to have 4 properties or 4 notes versus 1 or 2. Okay, when you run it through the calculations, it doesn't make sense to hold on to most of the stuff there for you, especially if you're buying it at a big enough discount like we are. Okay, how do we create win-wins for us as the borrowers? The investors out there, ladies and gentlemen, a lot. I don't know about you guys, but when I was a new real estate investor, I felt like I was on this hamster wheel, just running in place, doing all over, mailing out postcards, mailing out yellow letters, door knocking, trying to do things to get people to respond to me, and they wouldn't. Or if they did, it would be one deal, and I had to do the whole thing all over again, month after month after month. And a lot of people don't have that extra budget. Here's the beautiful thing is that the banks feed us deals when you've got connected with them. They'll send you lists on a regular basis. There's not that much competition. The note investing space is a small niche compared to your fix and flip, your landlords, everything else out there. There's probably truly maybe about 10 to 20,000 true non-performing note investors like myself out there. But I'll tell you this, there's a lot of people that like that options, or even the banks and institutions are getting excited about that. And that's great. Let them. They'll buy a lot of that bigger stuff. There's plenty of that smaller stuff that can trickle down to investors like you and me. Glenn asked a question, do you have to pay taxes on the property when you hold the note? If you get the borrower to reinstate, they're responsible for the taxes. Now, if I'm going to foreclose, and like today, we have a property in Ohio that we're getting ready to foreclose on. Borrower hadn't paid in 3 years. Tax sales next week. I went ahead and paid the $2,000 in back taxes, avoided tax foreclosure, wiping me out. I still bought it cheap enough to do that, but that's one thing you do in your due diligence. Look at the taxes owed. If you can get it modified, always try to get the borrower to pay their taxes, their insurance. If they don't pay that, then you have the right to foreclose. Okay, right to take the property back. But there's very little competition in the note space compared to other things. We find some awesome deals. We don't do skinny deals. That's the one big thing. If you get a list in from the bank and it's all just crap that you don't want to take it down, don't. Move on to the next one. I get people like, oh, I really want to do a deal, especially as the market got more competitive. People are like, oh, I'm going to do a skinny deal. I'm like, no, just wait. There are plenty of deals out there, okay? As Canadians, we have to deal with the exchange rate. Is it still worth it? I got plenty of other investors from Canada that are doing this, so yes. Can you write off those back taxes? It's an expense, yes, just like anything else. Okay, I'm not a CPA or an accountant, so you still want to check your CPA or account. But yes, if it's an expense, a cost in your real estate stuff, yes, you can write that off. Okay, very little overhead. You don't have to have a big office. I've negotiated deals from here in my loft for the last 6 months because we've been stuck down here COVID. I've negotiated loan mods while I was traveling on a cruise ship. I've looked at properties all across the country from the comfort of my own home or my office. All right, you don't have to have a big overhead. That's the beautiful thing that I love about this too. You can close residential commercial deals. If you can jump on the internet, you got a cell phone, and you can jump on LinkedIn and reach out to asset managers. That's some of the easiest ways to find deals. Glenn says, do you need a U.S. corporation to purchase this? You need a U.S. entity of some sort. Yes, Glenn, I believe so. I'm not an accountant or an attorney, but as I talked to my asset protection guy earlier today, he says it's best to get either like a Delaware Corp or an LLC, a lot of times a Nevada LLC. I'm not sure how the taxing goes and how that works there for you, so you still want to double check that. But we do have plenty of Canadian investors that call Canada home that are buying debt here in the United States. We're not, here's the thing, guys. We're not paying 90 cents on the dollar. We're not paying 80 cents on the dollar. We're not really paying 70 cents of the dollar. We're usually buying well below that to make some deals happen, okay? You can do this all across the United States. Like I said, a variety of things out this, and you can do this with none of your own money because there's plenty of people out there. If you're going to pick up an asset at 50 cents of value, there's plenty of investors that would fund that deal. Even if it take you a year to foreclose, there's still plenty of great deals out there for you. So I always find that a lot of real estate investors, when they get into the real estate space, they go property crazy. You know, they're happy as a puppy. You know, starting off, I'm a real estate investor. I went to my workshop this weekend. I learned how to do this stuff. And you talk to them 6 months or a year later, and they're literally wanting to kill themselves because they're so burnt out on marketing and trying to do all these strategies. I became the note guy because I got really good at one strategy. And if you're going to do anything in real estate, focus on one thing and understand that. Don't try to do 20, 30 different strategies. That's really will burn people out left and right. And I stopped focusing on fix and flips and wholesale and other things and just focused on the note space and really timed it well 12 years ago. That's all I've really focused on. Now, that's not saying that I don't end up with some property. Doesn't mean I don't end up with some properties that I got to rent out as an exit strategy. Okay. But I'm focused on one strategy. So I've streamlined my systems and I show people how to streamline their systems as well. So the point is that our note investors, you know, we spend a lot of time, you know, often feel a little crazy out there, but if you need to find distressed assets, guess what? We'll show you how to find those assets that are upside down in value. If you need realtor or people to reach out to you, we show you how to do that. If you're looking for people to look at your collateral files or to tell you exactly, because that's really what you're buying is that collateral file. The pen is mightier than the hammer, everybody. We've got vendors to help you to look at exactly what you're doing. Servicing companies, people do the borrower outreach, to get on the phone calls, to say the right things, to help negotiate with the borrowers. People will do that for you. You need attorneys to foreclose. We can show you the right people to do that. If you're looking for private money, IRA accounts, IRA companies out there, we can put you in touch with the right people out there. If you need insurance, there's companies out there to do it all. This is a business that, like I said, you're directing your vendors to make things happen. So at the point, it's literally like, why didn't I do this sooner? Okay. A lot of people that we get in are their landlords, the fix and flippers. They're tired of overpaying. They're tired of dealing with tenants and toilets and trash outs. And they rather deal passively, where they're not getting a check in their mailbox. They're getting a wire by the 5th of every month. Okay. So I started teaching people how to do this 10 years ago. I started off small with people, and we've helped thousands and hundreds and thousands of borrowers and investors all across the country to dive into what they're doing out here. I'm known, like I said, as the note guy because I focus on buying stuff. I walk the walk, guys and gals. You know, we've bought a lot of stuff over the last 12 years. Most of it's been good. A lot of singles and doubles, some grand slams, and then there's others that I struck out on. Don't ever buy a note in Chicago. I will tell you that right now. Chicago takes forever to foreclose. It's a corrupt city. Somebody asked about bad deals. I hate Chicago, okay? Trust my advice. Don't buy in Chicago. Don't buy in New York or New Jersey. It takes forever to close. You're not going to buy in Kentucky. They want $1 million bond there and it takes forever to foreclose. So guess what? There's a lot of other states out there with good deals. Whether it's Hawaii, like this picture was taken when we were out buying some stuff in a mastermind in Hawaii, or in Florida, whatever, guys. We've helped a lot of people, and the proof is in the pudding. I could go on and on showing you case studies after case studies, but one of the biggest things in one of our most recent masterminds, I was excited that our students had closed over 2,000 deals individually. Not my numbers, that's them in that group alone there. So we could go on and on, but what's the catch? Investors don't know what they don't know. Hey, we all struggle with 3 things. We all need somebody to pick up the phone and give us a phone call, reach out to an email. We're working through a deal. And I found investors struggle with three primary things. One, finding deals. Okay. Two, marketing. What I say how to raise capital. And then the third thing, obviously, is raising capital. And we've really put together a pretty good game plan in helping a lot of people close a lot of deals out there with it, goals, actions, monitoring, and evaluation to help them really take their businesses to the next level. So what we have put together is a kind of the Cliff Notes version of learning the note business. We call it Note Weekend. It's a one-day class that's basically yours truly teaching from 9 to 5 on the note business. And we actually have an upcoming training this actually Saturday. We teach it once a month, usually the third or fourth Saturday each month. It's a one-day training, basic mini workshop. You're not going to learn everything about the note business in one day, let alone 3 days, but this is a pretty good, damn good thing people tell me. It's the Cliff Notes. You get a 20-page manual that has an additional 10 hours of video links with our vendors and other training involved with it. We do a live stream via Zoom like this on Saturday. You can ask questions throughout the day. If you can't make it all day on Saturday, guess what? The replays are included, so you can watch the replays the next day. Yes, I get the replays out very fast. And no, you can download the replays. The replays don't expire after 24 hours. They're not like that. Okay, normally it's $99. Like I said, 9 a.m. to 5 p.m. for you guys. The next couple of dates, like our next one is August 22nd, which is this Saturday. We do one in September, then one in October. If you go to Note Weekend, you can actually see the full itinerary and get signed up there. We cover a lot. The first part of the day, literally, we'll spend on how to find, okay, what's going on my computer here? Okay, how and where to find the deals. You literally, I'll give you a list of 1,500 plus banking institutions in the United States across the country that have 5 branches or more, and it will show you how much they have in distressed debt, how much they have in commercial debt, how much they have in 90-day defaults, how much it is 30 to 89, how many of them have multifamily if that's something you're looking at, okay? Tells you exactly what kind of star rating, whether it's a 0 star up to 5 star, that's included, okay? We'll talk about how to fund these deals with OPM, whether it's local investors or Canadian investors. We'll talk about some of the different ways you raise capital. I love what Dave does. Dave does a great job in teaching people how to raise private capital on things. We see a lot of things on there, but we'll show some of the tricks that we do. We'll talk more in depth about the different exit strategies, how you get the borrower to move into one strategy, or how do you make money depending on what the borrower comes back and wants to do. We'll talk about the vendors and the teams. Pretty inexpensive part of the deal is having these vendors that work with you to identify. I have a conference call with my servicing company about once every 2 weeks. We look at a spreadsheet. They tell me where they're at. They email me on a weekly basis or sometimes daily basis when the borrowers reach back out. If it's performing, boom, I get a wire the 5th and the 15th of everybody that's paid. Okay. We'll also just share some loan trading platforms for you guys out there. You can start looking at commercial and residential deals immediately that are available for sale. Unfortunately, there's not like a loan MLS out there, but there are some major platforms out there. You can start looking at stuff today. Okay. Sharon says, are there distressed properties in Canada? Yes, there are, but your banking system is completely different from what they have here in the United States. So you can't, I can't talk to that besides that is a different aspect of it. Okay. Cyrus says, you mentioned you don't cover everything in the Note Weekend. What else do you need to know, and how do you help with that? I spend a lot more in depth, Cyrus. I have a 3-day workshop that I teach once a quarter. I'll get that in just a second here, but we cover these things, the loan trading platforms. We'll spend time talking about other things, marketing, a little bit on the legal side of things. We cover a lot in the one-day thing as a touch point. So I could go on with testimonials after testimonials from people all across the country that love what we do, how we teach, how they've taken it. I like showing individual deals. You know, Chris and Katie Moton, they've closed on this deal. They've closed on about a dozen since they closed on that one. Michael Weckel, his first month, bought this deal in Missouri. I love Hatham and Riaz. Hatham lives in Houston. Riaz lives in San Francisco. They partnered up. They've closed on over 50 deals in their first 12 months. Working still part-time. JD and Harvey here have closed on 4 or 5 working. They own a trash can business here in the United States. Do it. 20 closed deals in his first 6 months. He's actually up to 80 deals now. He bought a lot in Indianapolis. Peggy Sue is a realtor out of Delaware. She's closed on 4 or 5. Wayne Snell is a student of ours, started off slow a little bit. He's still working. He was working basically making 6 figures, working about 80 hours a week. Over a period of 2 years, we got him to transition away from that. He's closed on over 300 deals and replaced his 6-figure income on an annual basis. Bill Griesmeier's closed on, I don't know, 30, 40 performing notes because he likes the performing note. Cody Cox is out of Portland, Oregon. He first closed on 12 deals. He's up to about 50 deals now, if I remember correctly. He started a fund out of Portland. Howard Marcall is from the Dominican Republic, moved to Tampa, and is closing on deals all across Tampa on a variety of things. And then we've got Dan Dippin, who's actually a rocket scientist, and his wife, Jennifer, true rocket scientist on there, smart guy, put a plan together, was able to leave his job in 12 months, replace his income with the cash flow coming from his note business of performing and non-performing side. One of the things that we really pride ourselves on is working with people to come up with a game plan for what they want to accomplish, and then being able to reverse engineer those numbers back into there. So I got a ton of bonuses. We throw in over $1,000 bonuses. The class itself, guys, we're going to drop it down from 99 to 49 for you, because I just want you guys to take advantage of it and learn and get rocking and rolling on stuff. I have a goal to help educate and create 1,000 note investors in the next 12 months. And I want to take away any need to why you would not be able to do this. So our 1-day note weekend training, that's normally $99. We throw that in. We have a 1-day training as well. It's like a 4-hour, 5-hour where I call banks for 4 hours. You actually hear me make phone calls, the conversations, you see who I call, you ask questions back and forth. That's usually $49. We throw that in. That's actually, we're going to do that the Wednesday after the class. So you can watch it. If you can't make that, that's recorded as well. So you get the replays of that too. I'm going to give you the Bauer financial list. I talked about the 1,500 banks, the list that we pull on a quarterly basis. We're going to give that most recent list to you so you can take a look at that and start having your hot list. That's usually $400 to buy by itself. We do a 30-minute coaching call with you after the class. I usually charge $1,000 an hour for consulting. We're going to throw that in there and help you direct you in the right direction of whether assets or what states to buy, which way you want to go next. We include the replays. If you've got your spouse or business partner, they can attend as well at no additional cost. We also have a private Facebook group with over 900 of our students as a part of it that ask questions. Is a great networking thing. People, not only in the United States, but all across. That's the private Facebook group is usually $100. And then we also, like I said, there's 10 hours of additional videos. It's probably worth $100 at least, if not more there for you. But all that's in there, 1,200 plus in bonuses, the class, and all this stuff, just $49. I'm not trying to get rich on this. I just want to help develop people so that when you're reaching out to banks and you're calling and getting listened to you, when you've got stuff that you're not buying, hopefully you give me a phone call so that I can look at those deals, or I can help you find people, fund those deals, or buy those deals from me as well. I think that there's never been a better opportunity what's going on right now, and I'm really excited with what we see in the market going on. So I'd love for you to be a part of that. Noteweekend.com. If you sign up for the class and you're like, I don't think this is for me, let me know. We'll refund your money back on that day. Saturday, like, this is not for me, Scott. We'll gladly refund the money back. No questions asked for you. It's one of the things we stand by. I deliver content. I'm not going to sit here and blow smoke. It is not a pitch fest. The 20-page manuals outline. You can see what we're going to discuss at noteweekend.com on the schedule on the website there. And I'd love for you guys to be a part of that this weekend, this Saturday. So I could go through all the different, some of the deals we've closed in the last 12 months, back and forth here for you. But I'd love for you to open it up for questions and have you guys sign up. So question here. Karen says, can I sign up for the course this weekend but attend next month? Yes, you can, Karen. Sure can. You can sign up and we'll send you a link for next month as well. Okay. Can I register for the September training? Linda says, yes, you can. Yep, Katie, it's a good price. Thank you. Yeah, it's $49, guys. Got to have a little bit of investment in your part, otherwise you're not going to show up. And we'll run roughly from 9 a.m. Central Time. I think that's a little early for you guys, but we'll run till 4 or 5 o'clock, sometimes 6 or 7. Usually the last 45 minutes we'll do for online networking. We'll let you come on, talk about where you're at, what you're looking. People really like to do that because that's an opportunity to connect with other people out there. Let's see here. I think I answered that already. Questions from anybody else? I think I got a very good price. Sorry, is the class this week? Class is this Saturday, and the next one we have is the third Saturday in September, the 19th. Sharon asked a question. I'd like to know more about your quarterly training. Great question. So one of the things that we do, Sharon, we have a 3-day workshop called our Note Buying for Dummies, and it's a little bit more price. It's a lot more in depth. It's 3 days, much more in depth. A full day just on finding deals with scripts and calling banks and a whole lot more stuff with that. Second day, we spend a whole day on raising capital and marketing. The third day is all on the different exit strategies. So it's a lot more in depth in nature. One of the things I do is if you end up signing up for Note Weekend, I apply the $49 that you spend on that towards the $5.99 class date. $5.99 that class is recorded and included as well, stuff like that for you. But if you go to Note Buying for Dummies, you can see what that class entails as well for you there. But I like to start off with a dip your toe in the water, see if it makes sense. Can you pay via PayPal? No, Stephen. Stephanie, no. You have to pay however. I will pay with a credit card. We do accept. I think we can take Stripe though, not PayPal. Okay. Questions here. We got some other chat here from question. Deb, thank you for asking this question. Deb asks us, how much time do you need to spend on this business? We have people, if you got 10 hours a week, because we understand you're working, a lot of people start off just doing a little bit at a time. We got students that are starting, working still full-time jobs, not working 40, 50 hours a week and this stuff, but they're working 5, 10, 15 hours as they get things. Sometimes you get a peak as you get lists in and you're working through due diligence. And then other times, you may not see much of the stuff up there, but I'm willing to bet the next 90 to 120 days, we're going to see a lot of stuff. We're seeing a lot of commercial deals right now hitting the market. I think we're going to see a lot more residential notes here as not only now, but as we get into the fourth quarter, as the banks here have had 6 months to evaluate their borrowers, they're going to get a lot of stuff off their books that the people that are in forbearance agreements that haven't been paying to get to somebody else, especially for the year end. So I'm salivating like crazy between now and the end of the year. I think it was a prime time, and especially setting into other things. That's why we're doing the class on a monthly basis. That's why this next Wednesday we're doing the calling the banks. So you get really some impact. Boom, boom, boom. You can get off rocket and rolling for you. How much do you need to spend on this business? There's a lot of people that don't spend much. You don't need a lot of overhead. You're going to have some costs for marketing, like an email service provider like MailChimp. There's going to be some due diligence costs for BPOs, broker price opinions, or a title report. You need to do that. If you buy an asset and it needs to have the lawn mowed and it's vacant, you're going to do some of that stuff. There's going to be some of that work. It's going to vary on an asset by asset basis. But the things that we teach is you buy the asset at a price where you can have your funding partner fund the foreclosure costs and a lot of the miscellaneous stuff. So like we'll budget, say, $3,500 for foreclosure costs. If we only have that happen 50% of the time, well, the one note that we didn't have to foreclose on, now we got $3,000 that we can use towards costs and towards other things and expenses along the way. Okay. What's your number for a skinny deal minimum profit? I don't want to do anything below a 25% ROI, Chris. 5, 10 grand. Okay. I'll do that for a wholesale deal, but a skinny deal, I'm looking at cash flow here for the most part. I want my cash flow because that's what I want to build is wealth on performing notes for the most part. So when I structure my deals, when I make my offers, I want to make sure I'm still making, if they reperform, start paying their payment, I want to see a 25% cash and cash return over what I'm paying for the asset and taxes if I have to pay taxes. Okay. Leah says, is it a full day? It's from 9 to 5. There are some breaks. If you go to noteweekend.com and scroll down, you can see basically the outline, the rough outline. Sometimes it runs a little slow. Sometimes we run a little fast. Okay. But like I said, if we stay till 6 or 7, I'm there all day answering questions for you guys. There's not another speaker. It's not I'm only going to give you one nugget and then upsell you. That's not what I do. Don't do that at all. Okay. What are the skills you need to be successful sales negotiating? You need to understand it helps if you understand real estate. Sales and negotiation, we can put that stuff together for you. The beautiful thing a lot of times is when you put your formulas in place and what you're looking to do, your spreadsheet will tell you what to offer. Your spreadsheet will tell you what your maximum allowable offer is. And that's back and forth. A lot of our negotiations are via email back with the borrower, or not with the borrower, but with the bank. If it makes sense, great. If it doesn't make sense, I move on to the next one. Okay. I will tell you this. If you're way over analytical as an engineers sometimes struggle because there's a variety of ways the deals can go. Not bashing engineers, not at all by any fans, but there's a lot of different little moving parts. Like I said, you're not going to learn everything about the note business in one day, but you're going to learn a big chunk of it. Be prepared. Any other questions, everybody? Sorry. All right. Woo. Is this in U.S. dollars? Yes, $49 in U.S. dollars. Sorry. Will we learn to analyze the deal? Yes, Tracy. One of the things that we do is we'll pull up a spreadsheet and we'll literally break down how to kind of slice and dice it, how to evaluate, how to run some numbers on it. Yeah, we go through a lot of that. And here's the thing too, we've got other videos that we've included, other webinars, other trainings we've done that's included in with the Note Weekend training for you guys to watch as well too for you. Okay. What does the average person need capital-wise it going? Zero. We got a lot of people that have never used any of their own money to fund a deal. They've used other people's money. Okay. But I'm not gonna lie, you probably need a little bit of money for your marketing, as far as not postcards, but literally your email service. If you're going to be calling banks, you're getting charged, on your cell phone line, that kind of stuff. Okay. Can I get a record? Yeah. If you drop me an email at scott@weclosenotes.com, I'll send you a link to the replay. Actually, I'll send a replay out to everybody that registered. I've got that. So, is there an option where I can just invest my money? Yep, Neil, we can talk about that too. We work with people to help them just invest their money. How much to budget to set up the program initially after the training? Not much, guys. That's the beautiful thing about this. If you're buying assets cheap enough and you're marketing, you can wholesale the deal and make some great money. If you're getting reperforming, you're buying at a price that makes sense so that you can still have your investors fund. I know that sounds different. I mean, you're not going out and doing rehabs. You got to figure in, okay, $1.50 a square foot for paint or carpet or stuff like that. It's a different mindset. Trust me on that. Okay. How is the money moved from Canada to us when paying for deals? Bag. No, I'm just joking. Okay. Mule. No. Wire transfers. When you're paying for deals, you're always going to wire into the bank. Okay. I have paid for a couple assets with my debit card over the phone before. That was an interesting deal, but most of the time the bank wants to see a wire transfer where the money comes in. Okay. Yes. 9 a.m. Central Time. That is when we would start. This Note Weekend, will we be able to do it afterwards? I have been to many boot camps that give a lot of information, but not what you need to actually do anything. Yeah. Look, guys, that's why I schedule a 30-minute phone call with you guys after to make sure you got what you need. If you don't have what you need, you got to realize I got 1,000+ videos on YouTube. I've got over 600+ podcast episodes. I've closed on over $500 million in debt. I can point you in the right direction. If you didn't, this is part of the reason we give you the replays. If you sign up tonight, you'll literally get a replays to the last event, so you can start learning and watching that now if you want to. I didn't mention that. Sign up tonight. Tomorrow you get an email with a link to the last month's class. Start watching now, and then go from there. Okay? I believe in under promising and over delivering. Okay? What is it? October Note Weekend? It's probably the third Saturday is what it is, I believe. Third or fourth Saturday. It won't be around Halloween. I'll tell you that, but it's probably the third Saturday is what I think we have it down for. May push, but register for the September workshop. Awesome, Marty. Glad to have you. Do you teach where to wholesale the deals? I do teach how to wholesale notes. I don't teach wholesaling as a profit, but I do teach, and we talk about how to wholesale notes. It's pretty simple. Thank you, David. Awesome. Glad to have you. Any hand holding after the Note Weekend training? Yes, Deb. One of the beautiful things is we do regular webinars on Monday night on different topics called Note Night in America on a regular basis. If people call me, text me for questions all the time, and my staff, there's Stephanie and other people out there. Part of what we have was the Facebook group is 900 other students that you can reach out to and network with as well for you. Okay, so it's just not me. You've got a wealth of information from our students and other network out there too for you all across the country. We got people in Israel, Spain, London, Australia, New Zealand, Canada, Mexico, Dominican Republic, all across the country. Yeah, I'll send a replay out to everybody that registered for this, okay? See you Saturday, Heather. Thank you, sounds good. Watch out for that power source. Great questions. I'm loving the questions, everybody. Canada, your Canadian province is invalid, Michael. I don't know. Michael Tundro. Drop me an email at scott@weclosenotes.com and we can get you taken care of in some sort of fashion. So scott@weclosenotes.com is my direct email address. Okay, Michael? Question here. You're welcome, Timothy. Vanessa, did you learn anything?
Yes, absolutely. That was fantastic.
Good. What time is it? Oh, well, we were out of time, about an hour and a half. Okay, great. It wasn't quite the 5 hours, I promise, but hey.
I wasn't prepared for 5 hours.
No. That's Saturday.
Yeah.
That's Saturday. Here, what else? Questions? My province works fine. Okay, great. My email address is very simple, scott@weclosenotes.com. Can we ask questions? Yes, Deb. It's completely interactive. It's just like this. You'll ask questions, and at the end, we open it up and let everybody kind of come on video one at a time, talk about who you are, what you're looking for. Very interactive. It's easy to get me on the phone. Okay? Easy to get us on the phone if you have questions afterwards. Like I said, if you're going through the day and you're like, I don't think this is for me, I'm glad to refund your $49 back. I don't want to keep people around. I'd rather us part as friends and you go your separate way. It's completely fine. I don't need to keep the 49 for you. If you don't like it, total refund, no questions asked. Okay? Awesome. Thanks, Tracy. Glad to have you. Cyrus, thanks you, Toronto Scott. Okay, hey, Cyrus from Toronto. Go Blue Jays. See you Saturday, Deb. Awesome. Great stuff, everybody. Vanessa, thank you so much. And passing on to Dave, thank you so much for having me on. Honor to be here with you guys. If you joined us late, like I said, I'll get the replay. I'll email the replay out to you. So you'll have it first thing in the morning if you want to rewatch it. But for those that have signed up tonight, we'll get a link out to you, an email from me. So make sure you want to add scott@weclosenotes.com to your safe email. So that sometimes it goes to your junk folder. Look for that. Shouldn't be any later than 11 a.m. Central Standard Time, depending on how long YouTube takes for us to process it. But we'll get it to you by 11 a.m. Central Standard Time. If you don't see that, please feel free to drop me an email at scott@weclosenotes.com, and we'll make sure to either we have to jump on the phone to help you find it or resend it to a different email. My team is here to help support you in any way we can. And honored that you guys would spend Wednesday evening with me for roughly about 90 minutes. I've had a lot of fun. I love this, guys. This is something I live, I eat, I breathe the note business. I just think it's such an opportunity. And I've never found another thing that I found deals as cheap that as I found in the note business. I mean, you're taking over the bank's nightmares, but it's pretty easy when they give you the nightmares at half off to be able to work that into something that makes sense. So if you've got a partner, you'll see that. Dave, you just send me an email. Once you get my email, just send me your partner's information, and we'll send them the Zoom link for them to be able to use to log into that as well. Okay? So your spouse or your business partner, just drop me an email on that, guys, once you get the link, and we'll be glad to get them added there for you. Okay? Question here. Thank you, Katie. Thank you, guys. All right. How do we sign with a partner? You're good. Is that all the questions? Thank you, Gordon. Appreciate all of you guys. Thank you for answering the poll. It's been fun. Vanessa, go pop you a top somewhere. What time is it where you're at?
It's 8:30 p.m.
8:30 p.m. Time for an adult beverage of some sort. What's your choice?
We'll probably go with a glass of wine tonight.
Red, white?
White. It's too hot for red.
True that. What kind of white? Chardonnay, Sauvignon Blanc,
Chardonnay.
Chardonnay. Got a favorite?
No, not really. A nice crisp cold one.
If you get a chance, if you like California, Eco Domani.
Okay.
Eco Domani is pretty good, but Alpha Omega.
Okay.
Very good Chardonnay, very buttery. If you like it, phenomenal out of Napa as well. We like to partake in a little bit of wine as well. So.
Fantastic. Thank you, Scott. I hope everyone had a great time.
Same here. If pina colada, get pizza with your Chardonnay, you'll thank me, Stephanie says. Good stuff. All right, guys. I'm going to wrap it up because this is a third webinar in a row that I did. That's at 6 o'clock on a different thing. So thank you so much for having us, Vanessa. I'll shoot you an email tomorrow. Same thing for Dave. Hopefully he has a good evening somewhere, wherever he's at. All right. Thank you. See you all guys later. Bye.